Another one of the questions I get asked a lot about are fixed rates and whether customers should fix their interest rate or not. So this is certainly not going to be advice on whether you should fix or whether you should stay variable or what you should do. But it's just trying to give you a little bit of context of how banks think about fixed rates and the choices customers can make about whether to fix or not. So the first thing we need to note is that banks don't rely on the Reserve Bank to determine what they do with fixed rate. It is purely and simply a decision they make on what their forecasts are and whether or not they think the variable rate will go up or down. They're hedging their bets that they can make money. So the first thing to remember is that generally speaking, most customers are worse off with a fixed rate because the banks are setting their fixed rates on the expectation they're going to make a profit off them. Now, you have to remember banks are not a public service, they're here to make a profit. So whatever they do is driven by profit. So if you think they're fixing the rates to look after you, you're wrong. They're setting their fixed rates to make the profit and the maximum profit they think they can. So first and foremost, fixed rates may work for some people. You may be better off, but generally speaking, you probably won't be. But that's based purely on one scenario. So we'll go back a step and the question will be, why should you fix or should you fix? So there's two main reasons I think people fix their interest rates. The first one is to make sure that they know what their repayments are going to be for the next 1, 2, 3, 4, or 5 years. Regardless of their situation, they don't care what rates do. They just want to know what their repayments are going to be and that they're going to be consistent and the same so they can manage their budget. They might not be in a position to earn more. They might not be in a position to spend less. So they want continuity in their budget and their repayments, and fixing their home loan is a great reason and a great way to do that, to achieve that. So that answer is actually 100% correct for the customer if that's their reason for making that decision. And that's because they don't care what rates do. So if you go in with that mindset, then it doesn't matter what the variable rate does. If you fixed it because you just want certainty in your repayments, that is 100% the correct answer for you. The next reason is that people think, I won't say smarter than the banks, but they think they can get a better deal by fixing their rates. What you need to remember, though, and this is going back to what banks do, is that by the time you've thought about fixing your rate, they've already moved them upwards. And now's a particularly today the Reserve Bank's meeting to decide whether or not they move the variable rate. But the banks have already moved their fixed rates upwards. In fact, it's really hard now to find a fixed rate for 1, 2, or 3 years that is below the variable rate. Sure, there's probably a few around, but you need to hedge your bets then. And well, are rates going to keep going up, or are they going to go up and start coming down again? And that's where then you're basically red or black. Are you going to win or are you going to lose with a fixed rate right now? Now, some people did do really well a few years ago during COVID when they fixed in the ones and the twos, but when they came off the fixed rate and it was fives or sixes, then they hit struggle street. So there's a few downsides for fixed rates. Fortunately, there are 1 or 2 lenders who will allow you to 100% offset a fixed rate. Now, that is a rare loan, but there are lenders who offer them. And that's probably why you need to speak to a mortgage broker and find out, well, hang on, I want to fix, but I want the best of both worlds. I want a fixed rate and I want 100% offset. Can be done, not by many lenders. And that's why you speak to someone like me who can perhaps send you in the right direction if you are interested in that sort of loan. But it's very much it might be the right thing, but are you paying a higher rate than you need to be for longer? And so it's always a tough decision to make. It's not an easy one, but ideally you get some insight now into that the banks, they don't care what the Reserve does today in regard to their fixed rates. They've already made their best guesstimate on what they think is going to happen and what's going to happen over the next 12, 18 months, 2 years. Hopefully this will help you make a better decision. And if you're not sure, give me a call, ask me a question. Costs nothing. Thank you very much. This is Peter Ritchie, Finance by Peter Ritchie.